Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day recap for Monday, July 20th. Monday in the books. What a day for the Qs. What a day for the growth stocks. Tech, even the stay at home stocks, even though that there was some good virus data out from a couple different companies. But yeah, theme of the day: growth stocks rev higher. Just monster move in the Qs. Uh, you know, Proving that last week was a little bit of a dip to buy in the growth stocks. Very shallow dip, but man, the Qs were up 2.8% for the day. What was nice about today too was that we didn't really, if you unwound some trades on Friday, you could basically take advantage of today because we didn't gap up, right? We've done that a couple of the Mondays prior, where we really started higher and the market kind of rallied into the open. Today, the market was essentially flat, so it gave you an opportunity, and I've certainly had that happen to me before, where I've did my homework over the weekend, was looking at a whole bunch of setups, and everything gaps up. This was pretty nice. Now, there was a lot of things that were moving quickly on the open, but you had your chance to kind of get into various different names. But so the story was again that the Qs were just massively outperformed today. The SPYs were fine. They finished up for the day. S&P futures a little bit of a difference there because of the timing issue, but up 90 basis points it looks like for SPY, or for excuse me, for S&P. What didn't participate today was the small caps. So they outperformed last week, and again that rotation right back into some of those areas that became a little bit of buy the dip were the growth names. So just very, very impressive. Look at the VIX. I noted this weekend that the VIX closed below the 200-day moving average for the first time. A decisive close below the 200-day moving average for the first time since basically February. That price has been below that. Right? We had this little fake out here on the VIX, but this is basically the last time that this has been below the 200-day moving average since February. That's pretty crazy when you think about it. Also, we were talking a lot about the VXN last week, which again is the VIX for the Qs. Interesting that this was actually positive for the day. But here's where we stalled out. A couple of people asked. I put this chart on Twitter, and a couple of people, I guess, just didn't. Maybe I didn't put enough of an explanation out. But normally, when we have little bouts of volatility, they're fine. Little bouts of volatility is perfectly normal. And you could see that after we had that bout of volatility, it tapered off decently. So that's what that means. The VIX and the VXN, they're coincident indicators. They're not leading per se. They just kind of tell you what the market is implying for volatility. So again, to see these little bouts, they have been buying opportunities every time since May. We had one in June, in the middle of June as well, and then of course we had another one. Interesting the timing of this, by the way, right? If you take a look, maybe there's some seasonality during these months. I've talked about that before, where I've talked about how the beginning of the month is pretty impressive in terms of price performance, and then at some point in the middle of the month, we get a little bit of volatility. So we had this in the Qs. Let's just go back because I didn't notice this before that it was around the same date, but this was May 12th and May 13th. The VIX went up. VXN went up again. So some selling in tech. This was on 612. I'm sorry, 610 and 611 and 612. So it does appear around that middle of the month. And then we had 713. So you're really like, if you're having a good beginning of the month, it's a reminder to take profits because usually the market doesn't go up in a straight line. I feel like I'm always reminding people of and traders in the Tribeca Trade Group room that the market doesn't go up in a straight line. You just have to remember that. Over time, that is the relationship. We're talking about years, year upon year, but day to day, if you have a really nice rip in the market, you want to be, in my opinion, you always want to be selling a little bit into those rips and be a buyer of the dips. This relationship has worked for a while, so we'll continue to kind of say to do this until it continues to work. And one of the things that I noticed on Friday was that the growth names were coming to life. Tech growth, you could tell, and it's basically every time we have one of these little rotations into value that just last a couple days from what we've seen like in the past few months. The financial media covers this all wrong. Everybody thinks it's like a permanent move that, oh, we're going to see this big move into value or big rotation out of these groups. It's basically just like a recalibration. And I talked a lot about that last week, meaning that there's groups that get really oversold or out of favor, and there's other groups that get ahead of themselves. It's just a little bit of profit taking and a little bit of a move into those groups. But and that's how it's been going. Could it change? Could we see a more formal move into value and so forth? Anything is possible. But for now, that's just not what it's been. It's been just, just as I said, more of a recalibration, and then what happens is once the growth stocks get hit a little bit, people start to comb those over again. So I think we really hit the nail on the head, last week covering that on Friday, and that was the thing that I noticed at the end of the day too. Now I was playing things in the room on Friday that were more growth related. I just couldn't get much momentum out of some of the names that were moving higher, like the TDD. Now, yes, I wish I would have. It was a day trade last week in TTD. Do I wish I had it on today? Yes. And by the way, like I didn't list the option trades for today, like the option activity. It was basically just about every growth name. We saw TTD, we saw CrowdStrike, we saw Shop, we saw, Amazon, of course, some Tesla calls. There was some Etsy calls. There were a lot of semiconductor names. There was some Broadcom calls. There were some Micron calls. So, multiple areas just, and again, mostly in the growth and tech and software. If we look at these groups of software, pretty amazing, right? That this, and again, this is a little bit of a head scratcher I thought today too, because I was wondering if IWM would rally a little bit because of some positive data coming out regarding vaccine trials, but that wasn't the case, and the FANG stocks were up huge today too. Amazon. So I'll begin to kind of talk about some of the things that we trade and pre-positioned. I always try to give both sides of the coin in terms of option activity and about how to use options smart rather than not using them a little bit too much, which I think is talked about a lot on Twitter, that everything is always options, and options trading and so forth. But you really have to use them wisely, in my opinion, because you can get some really nice winners. So this was a pre-positioning trade that we did in Amazon, the one that I have highlighted, and this was the 2990 310 call spread. So, in the beginning of the day, I took a target at $10, and then I just kind of saw what was going on with Amazon for the day, but very impressive. So this dip was definitely bought. By the way, there's a lot of these charts look the same. And we were going over those on Friday as well, but I didn't even put Amazon on the watch list. I talked about it. I'm going to send that out now publicly, by the way, just so that non-members can see what we do, see what our process is like. But I had mentioned in the weekend video that I did not put Amazon on the watch list because I already had a position in it. And I put Google on the watch list. And so this was a beautiful trade. I mean, this 234 points for Amazon today. I don't know if that's the biggest like non-earnings day that Amazon has ever had. I would think it is, right? Earnings is a different situation, but just huge momentum in this thing today. Unreal. So I was able to take this thing off. I could probably, the issue with using call spreads, which I think is a great way to play a run into earnings, especially for a high volatile name where it's a debit spread, right? So you're buying the closer to the money strike and selling the further one out. So here's an example like this. The most that you can make is $20 on this. You do have to wait till the end of the week. And we've got a big earnings week. So that's why this thing is, the market makers are not going to give me $20 for this, even though the price is way above the strikes. But hey, $16, for putting this on Friday for 765, that's more than a double. So, and something where I'm not, if you look at how much the price of Amazon straight up calls are, it's not an easy trade to go an outright long call, because if you don't get the move in your direction, you could have a pretty big loss on your hands playing Amazon calls. But if you structure it as a call spread, taking this off for $16 and putting it on for 765, this was a nice trade. And I had said, in the weekend video, I said, hey, I wanted to do one for Google as well. And so today when I came in, kind of interesting, Google gave you a nice opportunity, and I had set this up in the pre-market session. Google, no slouch here, was up 3.1%. And I said, if there's any red in Google, that's where I'm going to be looking to put the trade on. And if you look at where Google opened, this is where I put this trade on. So, and Google was down like almost 1%. It was down like 60 or 70 basis points. So I took advantage of that, and I said, I'm looking for a run into the earnings trade, 360, and I didn't know that we were going to get this type of move, but where did this thing close? 1565. So very happy to take this thing off for 650. So that's a nice looking trade. And again, we still have plenty of the week to go. So I wanted to talk a little bit about that. What else did I trade today? Lulu was one of those names on the weekend watch list. This worked out quite well. Took this off for 18. Again, this was basically a day trade for this one. WPM, silver had a really nice day today. I put together a swing trade on Friday in silver wheat. And so, it wasn't just the tech stocks. This silver wheat is a nice looking breakout. So took a target in this one today. And took a target in this one today and still have the last piece on. SE, which I had put on, that was a dip play. It actually did not close on the highs today. So that was fine, I think, where I took it off. I didn't take it off on the highs, but 114.30, this was, so maybe one to watch for tomorrow. This thing went to the top of value, and that's where I decided to take this off. So again, we're setting up, a lot of our trades. Etsy was a trade that I got into last week. ENPH. So again, some of these things I'm taking off. I'm not being super, super greedy. I bought some ISRG today, thinking that this could have some continuation. Again, just a very short-term trade because they report earnings after the close tomorrow, and I don't want to hurt. This is not a trade to hold, into earnings, which brings up another really good point. We're going to have this is going to be a very busy week. IBM reported, which is, as you know, is not one of the better, tech names out there, but they did quite well. Cadence is up as well. CDNS is up after the close. And the way that I've been thinking about this earnings season is, playing some of these moves like the Amazon and the Google trades that I've already discussed for a move into earnings, and then you don't have to worry about what they're going to report on earnings, like we saw for Netflix last week, right? If you could make a ton of money, I think sometimes, again, I hate to call out newer traders or younger traders, but they seem to want to make money on the earnings. But the money, to me, a lot of times, not always, it's not always this way, but is made into the run-up into earnings, right? So this run-up into earnings was beautiful for Netflix. In a couple weeks prior, I had a question about this too. Somebody said, well, how soon are you doing, looking for a run into earnings? Sometimes for something like Amazon, where it sold off a little bit, you had both things, right? You could have had it a couple weeks ago, took some profits, and then of course did the trade that we did on Friday, saying, okay, it's come in enough to kind of apply another trade. So you got a couple different things. If you pre-position a little bit early, you got the run, a couple weeks into earnings, and then when there was profit taking last week, then you can kind of set that up again. So for the second time. So that's really, I think, an easier way to kind of think about earnings. All right, but I know people they still want to gamble on earnings, and we have our own formula that we use, for earnings. I do like to look if a name has done very well, if the history that when they report earnings, if they've done pretty well. But, you know, why even if you can make the money prior to the print, and you don't even have to worry about what's going to happen, right? And it's so difficult to play a name for earnings too, because in options, the way that I structure the option trades are call spreads, put spreads, that type of thing, because the calls and the puts have highly inflated prices because of the earnings event. So it's just a lot easier in my opinion, to deal with the run up. And we don't always get them, but certainly that's been the better way, I think, to do it. But I mean, Microsoft up 4.3%. Who cares, right? That's a huge move. If you look at what Amazon does on earnings, sorry, Microsoft does on earnings. If I said that backwards, I apologize, but I'm talking Microsoft now. But if you look at Microsoft and what they've done for the last 3 quarters, it's not much of a move. Now they've had other quarters. Just take the 4% when you don't even need to worry about what they did on earnings. Take the money and put it in your pocket. Right? I mean, it's such an easier way to think about things rather than, maybe I structure a small trade for earnings or something, but you got it. You got a up 4.3% move if you liked Microsoft. And again, like I see this all the time by traders on Twitter, like, oh, but the weekly calls, whatever. Just buy some stock. You got an $8 move. So that's my take on that. I'll show you the weekend watch list that we put together. Really, I'm very happy that this is up 3.4%. So I put this together. Some of which, when I started to go through the charts on Friday after the close, Friday during the day, and then of course after the close, I was like, wow, there's going to be some really good setups for this week, and I was excited, doing my homework, for the room this weekend, and I'll tell you, I had 23 names on here. I could have had 35 names on here, but that doesn't help putting 35 names on here because so many of them looked the same. I thought about putting Zoom video on, but look at the. I mean, here's what these names did, and this is why our market webs indicator is so great, is because these things just pulled back right into the top of value. And if you look at this group, right, you could look at CrowdStrike did the same thing today. This was another name up 5.2% today, but you could look at Docu. Docu didn't even make it down to the top of value. This is one that we tweeted out on Friday that looked like it was. Datadog is another one that was up 5.5%. So again, as I talked about last week when they sold off, when they rally, it's kind of the same thing. This one I did not put on the list because this one sank a little bit too far, and then you've got resistance. But ServiceNow, this one didn't make it to the top of value either. But look at the move in this thing, unreal. And that's another name that I did not put. I don't think I had ServiceNow in here. I put Salesforce, but I covered it. I covered ServiceNow in the video. So very, very impressive. Shopify, also same thing. Pull back into the top of value. Look at Shopify up $81. So that was another trade that I pre-positioned. So I didn't want to have pre-positioning trades all over the place, but you could see our Shopify trade that we put on. I think it's a little bit of weakness in the beginning of last week. I put this thing on July 24th, 969.75 call spread. This is a $15 wide spread. Almost made a double on it. So this way, again, I don't even have to worry about the rest of the week and trying to get that extra last $5, which would be nice if I still had one more target to go in this, but. this was a nice profitable trade. So I did take a couple things, like today we talked about Dollar General. Dollar General, nice move today to up to 2.3%. But look at the coiling here. So I really didn't want to add a lot of trades in today's strength, but this is something that I think sets up. And as long as it holds 192.27, I like when names are coiled like this. It could mean a big move is coming. So I did take that position. I also just put on a little bit of Apple. They were buying some weekly calls in Apple, and if Nasdaq wants to continue, I think Apple has a good shot too, possibly running, into their quarterly earnings report, which is at the end. We got a little bit of time before this one reports. You could also position for that one next week too. That's 7:30 that Apple reports. Yeah, and then Twilio. Unreal. This also gave you a nice sense of what was coming this week because Twilio was up huge on Friday, and huge follow through. And again, sometimes some people they get fixated on like how much the stock is up, and it didn't matter how much the stock was up on Friday. It was up 10% today, and another one out to new highs. So where does that kind of leave us? If I can unfreeze this. Tesla, by the way, also running into their report. So again, we could talk about stocks for another 20 minutes here, but I won't do that to you. Um, but yeah, this was up 7%. Fastly is one position I took today too. That one gets back above value. So 84.85. If you're interested in this, right, as long as this hangs above 83 on the daily chart, or if you like looking at the 1 hour chart, as long as it's above 84. So I hung in there with this one. I put this thing on, once this got above value. It didn't do much for the day, but I want to participate in some of these things. All right, so that's today's video. And again, where I would kind of take this through the end of the week is that again, take what the market gives you, and you didn't even have to really pre-position into too many things. Like even if you wanted Tesla today, if you wanted to put on a call spread, it would have worked perfect today as well. And I think with earnings, don't discount earnings because we just don't know what we're going to get. This fella sentiment trader, put out some good things, and I do like their work. Not to end on a Debbie Downer note because today was an awesome day. A lot of fun, but you could see, looking at some of these things, the moves that we're seeing are pretty unusual. So to me, that just means as I like to say, don't get over the tips of your skis with putting on risk, especially around earnings season. Be smart, right? Take some things off, leave a couple runners on, but let some of those winners run. But make sure you're taking profits, and that was one of the things that I said in the trading room at the end of the day. I have some risk on if this market wants to continue to go nuts for another day tomorrow, but I'm certainly locking in because it is earnings season, right? And I think earnings season is tricky, and you're going to have some of the bigger names. I don't think if IBM was down today, it wouldn't really make that much of a difference. It's really going to, when Microsoft reports and a few of the other bigger names that report, that's going to really kind of set the tone, I think, for what we're going to see in the coming weeks and what they talk about on their earnings call. So that's that for today. Great day all around, and I think a great day for Tribeca Trade Group members. Again, if you're not a member of Tribeca Trade Group and you want to be prepared going into these weeks, because I think I don't have the data for this, I apologize, but when we put together these watch lists, like even last week, the watch list wasn't up. What did this thing do again for today? Up 3.4% today. I think the watch list last week was up like about 1.6 or 1.7%, which still outperformed, which still did its thing. So if you like someone to kind of do the work for you and get prepared for the trading week, where if you don't have time to do it on the weekend, that's what I do for you. And you could sign up right on my Twitter feed, and you can click on this link, and you could sign up to be a member of the trading room. Again, I don't charge an arm and a leg. I'm happy doing this. This is something that is a big, enjoyment of things that I like to do. And that's why I only charge $129 a month, right? And of all the fees that I have, when you add them together, I spend a lot of money. I pay for a Bloomberg terminal. I pay for Trade Alert. I pay for Cheddar. I pay for what else? Slack fees. I use the best trading system available, which is Slack for a trading room, and I do pay monthly fees for that. So anyway, have a great night, everybody, and thanks for watching the video.